My name is Hendrika Putra. My student number is 291-251-86. Today, as part of my midterm exam, I will explain about the stock evaluations and cost of capital of PT Hexindo Adi Perkasa. I will do the calculations based on the last 5 years financial report from 2020 until 2024. Unfortunately, for financial report 2025 still not published by PT Hexindo. So that's the reason I'm just using the last 5 years start from 2020 until 2024. Based on the information received from the financial report, we can get their financial statement, cash flow of their company, and the last is you can get to about their income statement. So all of these three information I can get from last 5 years their financial report from 2020 until 2024. For evaluations, the assumption is I'm using the stock market price in 11 2025. Consider that I haven't got 2025 financial report, so I'm using stock market as a basis for this analysis. And I'm using the exchange rate is 31st March 2025 for the between exchange rate from Indonesian rupiah to US dollar. Based on this data, you can find the effective tax rate. I got 22.2, which is coming from the average of income tax expense and profit before tax based on the financial report from 2020 until 2024. Regarding the cost of equity, I use the other data other than PHAEI website. So the data information I got from multiple source. For example, to get risk-free rate, I'm using the 10 years Treasury constant maturity rate, TGS 10. And for DRP, I'm using Damadaran. And the same thing with the beta, I'm using Damadaran from the industry of construction suppliers. So for thermometer growth rate, I'm using the conventional methodology, just put 30%. And for FCF growth for 1 to third year, I'm using 4. Why I'm using 4? Because based on the last 2024 financial report, it's showing that they predict the FedEx window will be growing up for the next year. And we assume that the next 4 5 years, maybe a little bit decline is there. So, based on all of the information profit data and the calculation, we can get weighted average cost of capital at 9%, 0.12%, 9.12%. So, based on the data, we can do FCF calculation. So I do average between 2024 based for this operation cash flow, sales, and the last is which is the will be used for basis for average for basis for FCF. Based on that information above explained to you, I do projection of DCF for 5 years. So based on that, this is the figure. It can be shown for the next 5 years DCF projections. So subsequently, I'm calculating the terminal value calculation, which is very important to finally to calculate the intrinsic value per share of PT Hexindo Indi Prakasa. If you see from this calculation, and we can get enterprise value, and at the end we can get intrinsic value per share, which is I divided equity value divided by number of share outstanding, which is uh, the figure showing above. It's about 840 million. Based on that, I can conclude that the stock value of the PT Hexindo Adi Perkasa is undervalued because the intrinsic value is higher than the market price. The intrinsic value is 8,614 rupiah, while the market price per share is 4,210 rupiah. So that's the reason I verdict is undervalued. The second, I'm using the second methodology, P multiple valuation. So based on the information can show on this table, finally, the assumption I'm using for PE target ratio is compare with the peer of the Petit Hexino is using the United Tractor, which is the peer company of the Petit Hexino Adi Perkasa. So based on that, the fair value I can get 6,458 rupiah, while the current market price is 4,210. So based on that, it shows that the fair value per share is higher than the current market share. So based on the PE multiple valuation, it is undervalued. Conclusion. Based on the result of stock valuation by using DCF and PE ratio methodologies, the current market stock price is undervalued. Because of that, it is recommended to buy the stock of PT Hexido Adi Perkasa. The next task, I will want to do the cost of capital. Since the company is the same for this task and the prerequisite data to do cost of capital has been calculated and assumed during the stock evaluation that I showed to you this one. So based on that, I gather all information and show on this one. So the pre-tax cost of debt KD is 5.41% and after-tax cost of debt is 4.21%. Based on that, I do the calculation and finally we can find that with average cost of capital at 9.12%. What is the meaning of this? The conclusion is, based on the above calculation, cost of capital for Pit Hexander Adi Perkasa is 9.12%. This 9.12% figure is represent the return due of Pit Hexander investor required. Please note that WACC or capital of cost of capital can be used as an input to do FCF and later on you can do DCF calculation. This calculation as FCF and DCF can be used to do cost to do stock evaluation, which is can be decided for you whether you want to buy the stock or not based on the value, whether it is undervalue or overvalue. Thank you.